Welcome back to Crown's Crypto Cave and another little Sunday morning sit down, a nice little morning market wrap up before you get on your way to church. Go to pray to your bear Jesus, your bull Jesus. No, your goat Jesus in the background right there. Do not disregard the true prophets of this world. So without wasting any time, let's get right on into it over here. And Bitcoin. We have a very interesting thing coming in the market as of the last 12 hours. I was unfortunately sleeping during this time, but now I'm awake and I've woken up to what appears to be a rejection off this yellow 21 exponential with yesterday's daily close and fall through to the downside over here. Now, is this a shooting star or not? I mean, it's not necessarily the best, it doesn't matter to me if it's a shooting star or not. You typically want to see more of a wick to the upside, but what it is to me is a rejection off the 21 exponential, and we really have two in a row over here. Whenever I see two kind of closes like that and then fall through to the downside, to me that's likely to get some more follow through. I would say this, a little bit of a check on myself. They are in very low volume, so I do typically want to see those big reversals being put on higher volume, but a little bit more easily seen here on the 12-hour. Much more, a lot more follow through after this nice spinning top right here, potential spinning top. Although it's not necessarily at the top, so does that really count? Well, not really. So anyways, okay, so here's the big news. The big news is the 2-day death cross over here. The green 55 exponential crossing the downside of the purple 200, which, if you're unfamiliar of the only other time that Bitcoin's ever had this cross happen in the almost 10-year history of Bitcoin, well, it's right on over here in 2014. I've looked at these charts enough times to know this by heart now. It's right over here. You will notice that in the more recent times, in 2018, the test of the cross happened before, whereas the test right here of the cross happened after. And if you're familiar with Datadash, he's probably putting up his finger right now saying, excuse me, no, it has to happen after. Test has to happen after. I mean, I don't even know if he uses exponentials, probably not. But I'm just kind of going after anyone who's using like the dictionary definition. No, of course not. That's not necessarily needed. Again, these exponentials, these simple moving averages, all these moving averages, they just smooth out price action over time, and that's kind of the use case for them. The advantage of using them is you can gauge price action over time, but it's not going to be one-to-one. Nothing's ever going to be fucking one-to-one. That's just not how it works, and people who represent it like that are very, 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 very misleading. You also notice on the 2-day, a little bit of a test of the 21 as well. You really count that as a test or not? Well, in the formation of a spinning top, and more importantly, fall through to the downside. Again, no, very, very low volume on it, so don't want to put too much weight on it. Don't want to call like a super death just yet. But it does add credence to the overall case that we're talking about. Bringing it over here to the weekly on Stamp, and you will see that, yes, that last week's weekly close as a bearish engulfing, which to me is a very big deal, because not only is it a bearish engulfing after 3 weeks of just a slow trudge up, which was very, 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 very piss poor rally. It lined up for a 3-line strike, also in the formation of bearish engulfing, which is incredibly powerful, almost very, very likely to get followed up. Even though we have not seen follow through just yet, we have just seen what looks to me to be consolidation on this weekly over here. You also notice your yellow 21 exponential is hinting at is getting ever so close, ever so kissing. It's got its tongue out, it's ready, its eyes are closed. He's bobbing his head. He doesn't know if he wants to do it or not. And then the green girl right here, yeah, the yellow one's a guy, the green is a girl, and she's kind of veering off. She's kind of sloping down as well, but they're getting ever so close. And when they do start kissing, when they do start eloping and getting ever so close and crossing, well, again, similar to the 2-day death cross, you've only had one other cross like this in the history of Bitcoin, almost 8 or 9 or 10 years or however long it's been. Right over here, very, very similar to the 2-day. Funnily enough, because, well, that's kind of how the different time frames would relate to each other, you'd imagine. And very, very similar reaction, well, it's quite obviously the same price action, sending you down to your ultimate capitulation low. So with that said, I want to go over here and kind of chart out a few different things. Actually, before we do that, I want to go over a few other things that I do think are relevant here. So I'm going to take off my exponentials. I'm going to put on my B bands, my Trollinger bands, or bands that make a dance, whichever one you like. And I'm going to go back on over here to the weekly, and you'll see that the weekly, the reddish brown line over here, that's a 20 simple moving average, has actually rejected price action. And you'll notice that if you're familiar with the Bollinger Bands, you really don't have like a bullish trend on the weekly or really any time frame until you like both open and close that dildo. Jesus Christ, can I just stutter more? That dildo above or below that 20 simple moving average for the first time. So that's a really, really backwards way of saying, hey, we have not opened and closed a weekly dildo above this 20 simple moving average basically ever since over here. This was your last one all the way back in late January. So that's a pretty big deal, because not only that, it's also rejection of that in a bearish engulfing on not necessarily high volume either, to be fair. But you'll notice that these bands are getting pretty damn tight, which is suggestive of, hey, we likely have a move incoming. Whenever the bands get really, really tight, it's called pinching, right? And when they pinch really hard, then shit starts moving. Not mooning, but moving. It can moon sometimes, if you do close one above or if we were to start closing one above this guy, or opening and closing it above this guy, then yeah, it would have potential for a test to the outside bands. But right here, right now, this is actually suggesting that we are likely to test the outside of these bands right here at around 5,200-ish area. Now, not only that, but when you do start testing those bands, and I'll just kind of give you an example over here, after bouncing off of the median line, you start to do what's called pushing them, right? And you start pushing them up and up and up on the upside. Now, on the downside, you'd imagine, well, it'd be down and down and down. So 5,200, while it is the support of these Trollinger bands, doesn't mean it's always going to. It doesn't mean it's just going to stop there. If it were to start pushing it, it just means continuation of trend. Really, is what it's telling us. So again, just another kind of thing in the court of the bears, in my opinion. What else do we have to look at? Yes, I want to look at this really, really quickly as well. Just something that no one really looks at too often. The accumulation distribution indicator. I do like this one. It's not my favorite indicator, but it does get a little bit right. Now, this is offering a different view on this. I don't know if this updates on the weekly close or if it's updating in real time, but it's actually saying that we have some more upside to go. Whenever it's angled up, whenever it's sloped up, that's, it's basically giving credence to the uptrend, which we do have a green weekly so far. But you'd also imagine it would take some serious heavy sells to kind of get that slope back downwards. Over here to the 3-day, you'll see we're actually creating a positive slope as well. 2-day is gaining a negative slope, and the daily is decreasing the slope as well. So most are actually pointing towards some more upside using this indicator. Doesn't mean that you can't, just like beeline to the bottom over here. But my point is it'd have to happen relatively soon. So it could very well be that Bitcoin does have some nice green days. Again, we're looking at higher time frames over here. And my point is, and why I brought this up, is because, markets don't just like go in a beeline to one place. And I don't know why they call it beelines anyways, because that doesn't make any sense. They just call it an eye line, because then you could like go straight and then you jump and then you're there, and it's like teleportation. But again, that's really what I want to talk about over here. I've been bearish ever since I started doing these streams, but I've really been bearish ever since over here at 16,500. As soon as we had this guy failure, and so my point is that these markets take a long time to kind of figure themselves out. So with that in mind, let's talk about some potential downside areas to be looking at. And again, just because I'm saying them right now doesn't mean that, first things first, means I'm going to make a lot of assumptions, which we'll talk about. And also it means that essentially, essentially not only that, but I'm going to make a lot of assumptions. Jesus Christ, keep on losing my train of thought. But it also means that I just lost my train of thought, so fuck it. All right, whatever. I'm just going to plot out some nice horizontals over here. We're going to make some assumptions on this one that we actually do break to the downside. This is your big bad support right over here around 6150-ish area. That's one that you really do want to hold. I know that we did kind of break it down over here, but this was a bear trap right here, and that gave credence to this rally over here as being incredibly powerful, incredibly real. And you see that represented in your volume characteristics. Just as an aside over here, I want to quickly speak about this. You have an incredibly hefty volume kind of digging you out of this area after this bear trap, and that's really how a lot of the markets move. Not moon, but they can moon. But how they bottom is they basically they put in a little bit of a bear trap, get everyone thinking, hey, it's time to go bearish. It's falling over right here, right now, and then they bring it up the other way extremely fast. And then you'll note kind this volume over here on this rally with this volume over here on this past rally to 7,400. Very, very light, very, very small. And this kind of was giving us the idea all the way through that, hey, this was unlikely to be real. Price action is real, right? But it was unlikely to kind of reverse this whole damn ship. This guy over here, very, very real indeed. But again, rejection at the 200 simple, this red line up around here, and same sort of thing on our rally over here, even less so. This is very, 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 very light action. So with that said, I do want to plot the up resistance over here because I do believe that with the advent of really the last 9 months, but especially out of last week or so, last couple of weeks, we are looking at a ascending triangle, which would imply a more bearish a bearish interpretation because you have a 3-year bull run over here, culminating in a reversal top, and then boom down to 6,000, bounce it up $6,000. Okay, not bad. But boom, down again to 6,000, and then bounce it up $3,000. Okay, well, not bad, but not as good. Boom, down even further, very very hefty as well, and then bounce it up $2,000 this time. All right, a little bit less good, and then really hefty move downwards right here, down to 6,000 once again. Then only $1,000 move up, and then this one's been like a $500 move up. So you're probably noticing a trend over here that the bounces are getting weaker and the selling is actually getting more aggressive, especially with this guy over here. This has a psychology behind it. These sellers who took over here, basically forewent getting in a better position, waiting for the retracement all the way up to here, as everyone was waiting for. I'm sure that everyone was looking at the 618 Fibonacci retracement, and just to show everyone what we're talking about over here, everyone was talking about, guys, just wait till the 618 and then short it, because that's what's been happening on all the other rallies, and that was actually a couple $100 higher. But they said, nope, fuck you, and we're just gonna not do that actually. And by the way, just so you understand, this one topped out at the 6.0 over here, and if you take that for the last one as well, this guy and this guy, then your 618 would have been topping you off right there as well. So again, one of those things where once it starts to get a little bit more obvious, something a little bit different happens. So they forewent better entries for just getting an entry to begin with, which shows the overall bearishness, at least in my opinion. Also represented in the shorts on Finex over here. Funnily enough, we did see about 12,000 coins go up short on Finex on September 2nd, my birthday, about 2 weeks ago. Exactly 2 weeks ago, actually, at almost this exact time, and ever since then, more importantly, this average price was lined up with about 72 to 7,300 in price action. So not only did they actually whoever put up the short, which is likely a big entity. I mean, sure, it could have been retailers. I think that's highly unlikely playing with that amount of money. According to crypto Twitter, Flood thinks that, sorry, that's mean, thinks that, it's just a shit ton of retailers getting together and deciding, oh, well, we're all going to short right now. Let's just get wrecked and we can squeeze them. No, of course not. Of course not. When you're playing with that amount of money, you probably have a reason to, or at least you probably, or, we give them the benefit of the doubt and say, hey, probably professional. So yes, this person, more importantly though, is holding on to these coins short. So we don't really see any major let go of shorts over here. I mean, we did get all the way to 40,000, then drop down, and then let go of about 5,000 of them. But overall, seems to me like overall the big point is that most shorts are comfortably short and not really taking profit at that 6,100 down that we had earlier a week ago or something like that, right over here. So what that also tells me is that, hey, this is very indicative that this person who, especially in my experience, what I'm kind of used to seeing coming from a background of market making equity options, this person is not just looking for a $1,000 move or a $1,400 move. He's looking for the fucking grand slam over here. And we're going to talk about that in just a second as we just, get this bearish case a little bit longer. I really do want to short this right now. I have been uploading some more scalping videos, but I do have a positional short on my main account. But anyways, let's go back over to the daily and let's just talk about some what ifs, right? So we're going to make some assumptions over here, making assumptions. All right, what happens if this thing breaks to the downside? Well, very, very obviously, if we do adjust this to the former area over here, 6150, in my opinion, is a big area to hold. And the reason why is because I don't really count this over here as being like it is a support just because it's a former low, right? But I look at, the regression of the mean, right? Of kind of fitting it all around here, going all the way back over here. And to me, that's more important because, hey, first things first, this was more likely a bear trap. So it's kind of, it's supposed to look like it was a breakdown. So if we go back down there again, it's going to likely be a breakdown. It's going to be like a real breakdown. The market doesn't give you two chances to buy the bottom. And that's also why. That's also why. And people are going to be screaming at their computers, crown double bottom. Well, go see how that works out over time, because it usually just rolls levels over some period of time. Again, that last component, time, is absolutely massive, because it usually does bounce it on the second try, but that second try is the big question, though. Or like what happens after that is a big question. So again, yeah, just by coming down to this form of sport right here, that would just be very, 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 very indicative to me of just basing more on your sports. You probably do bounce at 5,800, 5,850, whatever it might be, but overall, it just, again, it brings up that time component. It's like, okay, we broke the big bad area of 6,150, which Bitcoin's really been, finding some comfort at for the last 9 months or so. So if we do break that area, it's likely to kind of lead to that next kind of avalanche, so to say. Again, 5,850 likely to bounce it, but am I going to be buying there? No, I'd be looking to close shorts there. I'm not looking to be a buyer at all until we're much lower. With that said, I'm going to go over here to my Bitstamp charts and just talk about some lower targets. And again, making some assumptions over here, making a lot of assumptions. But hey, if we do break 6150, well, where's the next big area to look at? Well, we do have, if we put on, and first we got to take off the accumulation distribution guy. And if we do put on the good old, volume profile over here, you'll notice, and you probably have already seen this, that there is very little holding you up all the way into, if you do lose 5,800, there's basically nothing doing all the way down to, mid to low 4,000s area over here. Well, do we have anything else that kind of lines up with that? Well, if I put on my drawing tools over here, you will notice, it's kind of hard to see with the volume profile on over there, but you will notice that the 786 Fibonacci retracement is actually right in that range as well, in this blue box, in this blue territory. If I put on the weekly time frame, you will notice also that and if I can scroll on in, that would be even better. You'll notice that the purple 200 exponential is likely to kind of crawl its way in there. It's just been slowly snaking around into that region. And on top of that, not only that, but wait, there's more. You do have these horizontals that we plotted in from earlier, right around this region, around the mid to low 4,000s region. Also, this dotted trend line is the almost 8 or 9 year, 10 year, or 8 or 9, or whatever the inception of the genesis of Bitstamp is going. I think it's going back all the way to, okay, it's to 11, so it's like 8 years about, or a little over 8 years now, I think, or maybe it's 7 years. I can't even do fucking math. How do I do this as a living man? But it's never been broken in Bitcoin's history, and more importantly, any time that Bitcoin's ever touched it, it's never gone lower. But that doesn't mean that it can't break. Now, the point that I want to bring up that I want to bring up over here is that, hey, this is actually intersecting all of these horizontals, all of these diagonals and everything coming in right around here, again, in the mid to low 4,000s, where it's kind of suggesting. So I'd imagine, a very, very good reaction around there, maybe even a potential bottom. Now, yes, there are lower targets. If I was looking at this as like some sort of a major bear flag, which I'm not necessarily sold on, it would imply a target all the way down here to the low, to the mid to low, to the mid high 2,000s or 3,000, something like that. It would also be your this weekly 200 simple moving average over here, that red line, also lining up with this nice horizontal coming in around there. So a decent kind of work around there. Also, your 886 Fibonacci retracement, funnily enough, which is where Bitcoin did bottom in 2014, and it kind of accumulated between this 886 and the 786 right over here. So, I'm not saying that has to happen like that. It's just kind of interesting to look at if it does start to crawl its way over there. That makes sense. And if we do over here to the BLX index, you will notice that Bitcoin did bottom on the 200 exponential and 200 simple in 2014. However, you'll notice in 2018 they're actually much further away. So a little bit of divergence there as well. Not necessarily a death sentence, just kind of pointing things out. Let's go over here to GDAX, and I want to give the bulls their due diligence, right? The bulls, what are the bulls looking at? Because there's plenty of people bullish on Twitter. What are they looking at? Well, they're looking at a falling wedge, most likely a falling wedge in this shape over here, which it has the right shape, but I absolutely fucking hate wedges because they just have a history of fake outs there. I think that they're low probability patterns, although several people would certainly disagree with me. But in my experience, they're very low probability patterns because, well, I mean, just you saw one just not too long ago, right? Right over here. It was like a month or two ago where this was the right way to draw it when all you had was this and this, and then you boost up over here and it's actually it's a breakout on lower volume, fair enough, lower volume, and then you get shoved right back on down, so a little bit of a fake out, and then what do? Well, you just redraw it, and That's fine. But let's just make the assumptions that the bulls are right. Well, you're having a good reaction off your 200 simple and exponential down here if we just take everything off. And yeah, that's all well and good. However, what I would offer up and why I don't believe that this is the correct way to be interpreting this chart right now is that you're seeing volume kind of spike up as the pattern matures and progresses over here, which, and especially, and more importantly, it's spiking up to the downside, which is definitely a big warning signal as well, at least in my experience, as a falling wedge has a psychology to it. It has a psychology of a shakeout of sellers essentially, and what we're seeing is actually sellers increase their aggressiveness. So that doesn't really work for myself. Also very important. Let's go back on over here to stamp, and we're gonna put on the monthly. Just talk a little bit more about scary shit. I'm gonna put on the 10 simple, by the way, represented by the red line over here. And we'll just have a few more things to speak about. Yeah, so the 10 simple over here is actually lassoing price action once again, just like it was in 2014. Bitcoin teetering along the yellow 21 exponential over here, although it has, yeah, it's flatlined, slight downslope. But still plenty of time left in the month to go. But overall, if you're not familiar with the 21 exponential on the monthly, that's kind of like my litmus test for generally bullish, generally bearish. And, just the fact that it's, again, basing on there, not the best sign. The only, and you can kind of see it in the charts over here. The only other time that Bitcoin was below it was, really when it was making its lows in 2014. And you'll also notice that when Bitcoin took out kind of like dug itself out of this accumulation phase, well, how did it kind of tell you? Well, you got your first monthly close above the yellow 21 on extremely heavy volume, and you never even got close to testing your 21 anytime soon after that. Like never, never. A couple of wicks down here, but as you can see, is well and far away. Then you kind of reversed over here. Well, you didn't just kind of reverse. You reversed over here on tweezer tops. Follow through right here, consolidate between 6,000 and 12,000 in triangular fashion. Break that, resolve out to the downside, and it's just been a slow drift on very, 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 very low volume down here, as you can see, as Bitcoin kind of teeters along this yellow 21. So to me, this is pretty damn bearish as well, although it's not confirmed. Again, it's certainly not confirmed at all whatsoever. Not confirmed, but it does offer up some it does offer up some perspective, because again, if this area does indeed break, the blue 30 simple moving average does become like a magnet for price action, in my experience, as well. And again, this is a monthly chart, so these takes time. We look at these charts every damn day, and it's easy to kind of trip yourself out. So with that said, I do want to talk just one more thing about the daily. You also notice, and I believe I shared a public video about this strategy, the 10 simple, that red line crossed on the downside of the yellow 21 exponential on the daily time frame, no less. Typically has pretty damn good results, especially when you're trading with the trend, not against it. And again, just a rejection of your 21, and perhaps we do see this move downwards. Although you will see that the daily 10 simple has caught price action right here. So definitely not a death sentence just yet, but just some more perspective. And if you haven't seen that video, definitely check it out, because that is a very, very powerful strategy. Although I always save the best strategies for the Technical Analysis program to, just subtly show myself. Got to save something for that, man. Got to save something for that. I hope that people do understand. I'm going to go into the low time frames just really, really quickly over here. Probably printing a lot of bearish divergence along this top over here. Well, you don't really have bearish divergence to look out actually, but you do get this rounded over formation at the top of a weakish rally. The rally had some bearish divergence over here, only seen on your lower time frames, right around there. Yeah, so to me, it looks like we kind of just got we had a little bit of a reaction at the 100 exponential, that cyan line, tried to test the 200 above there, a little bit of a rejection, and likely to see this one. Well, I don't want to call this right now or anything like that, just because that's not really what I do. But to me, this looks like it wants to come down. Again, timing is the X factor component, which is just kind of an X factor, right? Let's go. I just want to look at the lower time frames really, really quickly over here. Looks like we're ticking up right now. Where's this thing going? Again, as long as you're below 6,500-ish area, I would interpret this as pretty damn bearish, and like immediately bearish as well. So yeah, I'm just going to kind of be waiting this one out. I'm going to go have a nice brunch with Elsa over there. So I'm looking forward to that. I'll be watching the charts. I'll be hanging out in the Discord. By the way, if you're not in the Discord, definitely check it out in the links in the description. It's free. It's there for you. It's really good discussions. A lot of really, really cool people, a lot of great traders, a lot of new people as well. But, we all kind of come together and like share our unique, perspective on the market. And that just makes for a better community. And I've really, 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 really been enjoying it. So that's probably going to do it for this this stream today again, or let's just kind of quickly talk about the range. So we did actually have an ascending triangle as of yesterday, and then it broke to the downside, which is again why I always talk about, I don't care about the interpretation of these patterns. What I care about is how you react around support and resistance, and this one broke the support. So there you go. This guy's kind of floating out in the ethers. Yeah, there we go. I'm gonna take this one off. So the range high basically 65.50. Middle. This is a support right here, as you can see at 63.50. But I don't look at it as like a big deal. If I wanted to like scalp a trade off there, well, you had your chance already. And then 61.50, obviously the very 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 big area to be aware of. If by some miracle you do break above 65.50, there's very little stopping you from 67.50s to 68.50, and above there things do get a little more interesting. But the only way that I get bullish myself is if we actually started closing dailies above this upper resistance trend line around 7,400, which would actually equate with a new higher high, which we haven't done in the last 12 months. And of course, let's say another scenario, like what if Bitcoin did reverse right here and did start heading up further higher and further? Well, the only way that I get that I'd start to believe that the bottom is in and it's time to not be short any longer, and like it's all the fears are gone, is when we start closing dailies above this 10,000 area over here. Until that happens, I will be certainly cautious, and I am certainly bearish right now as well. My opinion is bearish. So again, that's going to do it for this Sunday morning video. Hope that this video finds you well. I'll be back on a live stream near you soon, and maybe some more scalping videos if I got the opportunity along the way. Hope you guys have a great Sunday morning, and I'll see you guys soon. Take care.